So welcome guys to today's video. So today's going to be a very quick one. It's just a recap, price action analysis, and sniper entry, how to better time your entries in the forex market. So you guys know we've called the AUDUSD to be bearish for over 2 weeks now. So for those of you who don't know that, there'll be a link in the description or a link around this video here for you to really see how we called that out. So this pairs the AUD/USD, the daily time frame, and we called the market to be bearish, and we expected it. So you can see the shaded area. That's the air portion we're going to be analyzing. That was last week, and today, from on the time of recording, today is Tuesday. So I want to analyze that price action for you there to tell you how you'd have better timed your entry on that. But before that, I want to just point out that we called that price was going to reach for the 72,900 level, and that's the level we have right here. And you see the way price trade through it. You understand? Price trade through it. So our analysis on that price projection that we called last 2 weeks has been fulfilled, and now mind yourself, we could see lower prices. You understand? Probably a higher price, but that 72,900 level is the level I reasonably expect price to get to before we now know okay what we're expecting the marketplace. But as it looks, as things may look right now, we're expecting a bullish move upward to fill in this void right here, and after that we should be seeing more bearish moves in the marketplace on the AUD/USD. So that's just for future analysis. But what I want us to really focus on is how you'd have capitalized on this move here, on this shaded area right here, and better time your entry. So since we already knew that okay, price was going to be bearish, you understand, was going to be bearish down to the 72,900 level. So let me just bring out the 72,900 level, down to the 72,900 level. Yes, this area right there. We already knew that price was going to be bearish down to that point. And as at this week, so let me drop to the 4-hour time frame. As at this week, that was last week, we saw price is still yet to drop to the 72,900 level. For those of you, let me just get it so it will be clearer for you to see. So that's it right there in price, 72,900 level. So we reasonably expect price to get down to the 72,900 level, and we saw price at the open of this week, we saw it go down, we saw it went down, and all of a sudden it started trading up. So if you look very closely right here, you had two opportunities to capture a move in this particular price action. One of it is here, one of it is right here, this region right here, to capitalize, to catch the up move, So how would you have catched this up move? If you look right here, you're going to see a break of structure right here. This is a break of structure right here. You see, price traded above, breaking this high of this whole down candles right here, creating what? A bullish order block. You see, price traded down into where the order block. Price traded into the order block. And immediately we saw a rejection in price, and price traded higher. So where was price aiming for? If you go on the higher time frame, you see that price was aiming for these double tops right here. For these double tops right there. Mind you, the double tops are referring to is the body of the candles right here. The double top, and you see price traded into it. So that would have been your first move. You want to say you wait for this break of structure to happen right here. Mind you, we already know that the market was going to be in a bearish move, but the market presented us with an opportunity to also catch a bullish move. So that the market is going to be bearish does not mean we're not going to see bullish moves. You understand? So you must understand that for price to move, price must be efficient. So it must deliver on both sides of the market. So price could as well as traded straight to the 72,900, but the delivery algo decided to give us a bullish move first before showing us the bearish move. You know what I'm saying, for the real order flow. So, and that bullish move was seen here, right here, the 4-hour time frame. We saw the break of structure. We capitalized on the order block right here on this lowest last close candle right here, the order block, and would have bought right there. That would giving us 1,000 pip. That would have been enough for you to close the week. So let's say, for instance, you want to better time your entry. All you'd have done is once you see this order block being formed right here, all you need to do is just put your marker right here. You drop down to the 1 hour time frame, the 1 hour time frame, which is right here, and all you want to see is that bearish move downward where into the order block, and that's what you saw here exactly in the London session. You saw it right there, and that would have been your entry right there. For those of you that use candlestick patterns to trade, right here, this is your hammer, your rejection candle you want to see right here, and that's enough for you to pick up a buy, put your stop loss, enter your buy here, put your stop loss just with 236 pips, and capturing your 869 price movement higher. So you'd have traded on the bullish side of the market, or as well you'd have just waited for the overall market direction, which is the bearish move, which is what we're going to be looking at now, which is right here. So when price traded up into that place, so you would have, once you saw price trading down in the week, which it did right here, you saw price trading down in the week, and all you're expecting is to catch the up move. Probably some of you got in right here when you saw this breakout. You got in right here, and also you got stopped out. No problem. You want to wait for where this double high over here. Remind you, we identified this double high where on the higher time frame. Mind you, I told you in some of the videos I've published, I tell you the institutional reference points on the higher time frames are the ones that actually hold true. So right here, if you were looking on the 4 hours, you would have been anticipating this double top right here, the double top right here, and pricing gets exactly into that double top. But if you have used the higher time frame, that's the daily, the weekly, and the monthly, you'd have caught the higher time frame institutional reference point, and that's what price reached for right here. So on the 4 hours, it's reached for it right there, and we saw price started trading down. You want to see price started trading down, didn't engulf this candle, so no other block formed there. But immediately we saw a price bounce off. So some people would have seen this, oh, this is a bullish move. You want to say, because mind you, this particular candle engulfed this whole 3 candle, and you would have been misled to think that this was a bullish move, that price was going to keep going higher. But mind you, we've already identified that price was going to go lower. You know what I'm trying to say? And all of a sudden we saw a price trade lower, forming, giving us our pattern. That is a pattern, an institutional reversal pattern, which we had right there. The M pattern, as some people may call it, the M pattern. But this is not more like an M pattern, it's more like a reversal pattern. Price traded high, you understand? Price traded low, and price traded high again, reaching for where? This particular high over here. Let me mark that out for you. Price traded high, price traded low, price traded higher. You understand? Is a smart money concept. You understand? Breaking this previous high, forming us a what? A breaker, a bearish breaker, and that's what we had right here. This is a bearish breaker. If you extend this out in time, you have it right here. It's a bearish breaker right there. And if you see what the price do, when price broke through that breaker on this particular candle right here, price traded back into that breaker. You're going to see it clearly on the 15 minutes. Let me get that on the 15 minutes. So you can see on the 15 minutes, if I zoom out very well, on the 15 minutes, here's the bearish breaker. Price trade through the bearish breaker and retests right there just before the New York session. Just retest the bearish breaker, and what do we see? We saw price move downward. So if you're a day trader, you'd have capitalized on this move, which is giving you 500, you understand? Or you would have capitalized on, or just capitalized watching it on the 4 hour time frame, which is right here, and you'd have just be confident enough to use this particular order block right here when price trades into it just before the main threshold, and you'd have capitalized taking the move down. But as for me, what I did was, once I saw the price has reached into this double top, I just took my particular short there. I short the market right there on the 1 hour. Once I saw the price has reached into this particular place, once I saw this particular candlestick right here, this bearish candlestick, this was where I placed my entry at that 74,500 level. So I held my entry down to the 70. I actually didn't reach the 72,900. I actually exited at this position, the 73,700 level. That gave me about 400 pips because of my lot size. I'm risking small, managing an account, so I risked little. So I exited at this position, giving me just 400 dollar. So that is just that. These are you that better timed your entry, use understanding institutional order flow and knowing, okay, this is the market direction. So you either would have caught the bullish move, or you'd have caught the wait for the institutional order flow to align and caught the bearish move. So either way, you'd have won, or you'd have had a winning trade in the market. So I hope you find insights in today's video. If you want me to really explain any portion in this video, you can leave the thoughts in the comment section. I'm going to be coming up with entry techniques on how you can better time your entries in the forex market. But this is just one of the episodes of the price action sniper entry series. I hope you find value. Thank you very much. Make sure you hit the like button, and see you in the next video.